how do we create an investing system? Because this is important. It starts before. You start building your cash position before the recession. So you build cash in the bull market, and when you're in the bear market, you have now an increased cash position.
Welcome to the How to Scale Commercial Real Estate Show. Whether you are an active or passive investor, we'll teach you how to scale your real estate investing business into something big.
Thank you to everyone who is a dedicated listener to the How to Scale Commercial Real Estate podcast. Just want to give you a heads up that today we had some audio issues on actually 3 or 4 episodes that we recorded in a row. They were such good episodes, and the guests were so kind, of course, to share their time and insight with us that I couldn't ask them to re-record it. So we're going to go ahead and publish these episodes. I am aware of it. The audio is not what I like to put out, but running a daily show, at some point in time, we're going to run into a hiccup along the way. And today is one of those days where I get to share my mistakes and hiccups right along with you. But again, it's a great episode. You can hear the guest a lot better than you can hear me. And it's just part of what it is that we do. Nevertheless, here it is. Thanks so much for tuning in. Certainly appreciate it.
Simon Severino helps business owners in SaaS and services run their company more effectively with results in sales that soar. Simon, welcome to the show.
Hey, hello, everybody. I'm happy to be here.
Simon, thanks for coming on today. We're having some major tech issues on my end. My sincere apologies, but I appreciate you working with me here today and making sure we get this episode in. You're calling all the way in from Vienna, Austria, and it's also the end of the day. So I certainly appreciate you taking the time to come on today. There are 3 questions, Simon, I ask every guest who comes on the show in 90 seconds or less. Can you tell me, where did you start? Where are you now? And how did you get there?
Oh, that's easy. 21 years ago, I did fall in love with one big problem, which is how do you solve the go-to-market problem? So landing products in the right market and dominate the market. How do you do that? How do you launch, etc.? It's a big problem, right? How you dominate the market. And I did fall in love with that problem, and I did nothing else for 21 years. Every day I've been, immersed in those problems with teams around the globe, from New York to Singapore. And that's what I do. And so they started asking for more, and I had some templates and some stuff working, and now it's a global business. But it started really by Simon solving the big go-to-market problems of teams. And that led to more teams. And that led to learning and knowing more and having more knowledge and more tools in that space.
What was the thing that kind of turned you on to that idea that, hey, there's a go-to-market problem for whatever it is? There had to have been a moment where you go, wait, there's a problem here that I can help solve.
So I want to spend my life on exciting things that are intellectually stimulating and that are tougher for most people to solve, because I'm competitive, right? I don't want to do something that everybody can do. I want to find the edge. Where can I be slightly better than whatever there is right now? Because that creates interest for me and energy. So I'm in my free time, I'm a triathlete. So I like to explore my limits and to go a little bit beyond, because that keeps me awake, keeps me healthy, keeps me moving, right? And so the intellectual stimulation of one big market domination problem, I love that. And sometimes I have to be 5 days, 6 days, 7 days in one room with the team, like the team of BMW. Before we came out with the Born Electric strategy, we were days, multiple days in one room before we get out. We need a plan, but we don't have a plan. How to beat audit? There is no plan. We have to create one. And so that's intellectually stimulating. It brings me to the limits and beyond, hopefully. So it makes me a little bit of a smarter person, of a better person, because I could endure something, I could learn something, and I could improve the quality of something. That makes me proud. And then I go home and I'm a better dad and I'm a better husband. That's basically the loop that motivates me.
What are some of the key, and I think about this as it pertains to commercial real estate, and for us that are scaling a business and growing in our own right, we have our own go-to-market problem, because we can have some really, we could have a tremendous asset. We could have, even the financing lined up. But for one of the components of this business is that we always need passive investors. We always need to be expanding our investor base that comes into our company. What are some things that you commonly see inside of companies, big and small, that you say, man, these are common problems as they go to market with their product? With our own right, we're going to market with a product, right? I've got an amazing asset I need people to invest in. I just need to find those investors. It's a very much problem. What are some common things that you see inside of every company you work with that you say, man, these are things that are easy or reasonably easy to solve?
So we have revenue problems and we have investing problems. So the first problem is, how do we generate multiple reliable streams of income that ideally are passive or become passive at some point? And then the second problem is, all right, and now that we have those profits, how do we keep them around in an environment that is deteriorating, like the current recession, inflation, and the losing of purchasing power of most currencies, and even in real estate, the last wonderful place where you would have value going up, even that might be at the end of a certain cycle and reach a moment where it's not that easy anymore to increase your wealth by just putting it there. So first problem, revenue. When you create multiple revenue streams, we help people, especially in these tough conditions right now, like we have right now, to spend less time on marketing, less time in paid, especially paid marketing. We basically help them to stop paying for marketing and find sales activities that bring in more cash faster in a more organic way. So you can do that with different systems, the joint venture systems. You can have multiple system, outreach system, cold calling. You can have email systems. You can have a ton of systems that you implement. You have to find your own. But the important thing is that you focus on three things. So basically, you go through your list of activities. What do you have on your plate right now? And just pick the ones that contribute to those three things. They either raise by 25% the conversion rates from your existing conversations. So same conversations, but 25% more closed deals. Or they help you increase by 25% the frequency of your sales. So shorter sales time from awareness to closing. Or they increase by 25% the price that you can charge for the same thing. And that can be done with a better positioning. There are 8 things in the book, Strategy Sprints, where I walk people through. You do those 8 things, you have a better positioning. It takes you 10 days, 7 to 10 days. Then you have a better positioning, and then you can increase by 25% your price for the same thing, because there is a higher perceived value and a lower risk of working with you because you're better positioned. So you are de-risking the process for the other side, and then they can pay more. Now, if you increase those 3 things by 25%, there is a compounding magic. It creates plus 99% in revenue. And that's what you want on the revenue side. You can double revenue in 90 days by just doing these 3 things. In the book, I explain exactly how you do that. It's Strategy Sprints, it's on Amazon. And we can go into the depths, if you want, of some parts of it here. But basically, you pick the 3 things that raise conversions, that make sales time faster, and that make you charge 25% more for the same thing. You focus on those 3 things. That's what I would do in a recession, because that keeps your cash flow high and keeps your liquidity. And this is what you want to have in a recession. Who stays in the game? Even Walmart today had problems because they don't have enough earnings. But earnings is one thing. Will Walmart stay in the game? Yes. Why? Because they have liquidity and cash flow. That's what you need. Earnings is one part. That's the revenue part. But liquidity and cash flow is what will keep you in the game. So you don't have to worry for Walmart. The stock will go down for a while, but the liquidity and cash flow is what makes the difference. So they will still stay in the game.
That's really, I think, insightful, because we are, I think, entering, and maybe I'm self-creating the problem, but I think we are entering a recessionary phase. And a lot of businesses, I remember, for us in 2008, I saw a lot of businesses in the industry I was in just completely go out. I'd say 90% of my competition died, and we certainly suffered pretty hard times ourselves in the business I was in. We weathered the storm, but I thought a lot about this. I thought, gosh, in the next recession, how am I going to position ourselves and our company to take market share? I think that's one of the things that happens in a recession, is that it provides incredible opportunities for those who are prepared to really expand what they own in the marketplace. And I said, man, the next go round, this is one thing that I'm going to hyper focus on, is just growing our company by leaps and bounds, because there's just few opportunities that present themselves like a good solid recession for you to take more market share. So talk to us about that. I know you'd said that the 3 strategies, and one of them, it sounded like, is focusing on revenue. What are some other strategies that you are actively coaching your clients on right now for expanding their companies in times of recession?
Opportunities in a recessions are to buy competitors and to buy strong assets for a cheap price. So before we go to investing, one last thing we have to check are our costs. How can we turn the costs, the main costs, let's say personnel, etc., contractors, suppliers, how can you turn your main costs from fixed costs into variable costs? For example, a PR agency, instead of paying them $4,000 per month, say, hey, I want to be in Inc. magazine. I'm going to pay you $3,000 for being in Inc. And I'm going to pay you $7,000 for being in Harvard Business Review and $40,000 for being in the New York Times. Instead of a monthly retainer, you do that performance-based, which means you are de-risking your side, and you are also keeping them on their toes, which is it's better for everybody. And so you are distributing the risk 50-50. Same thing with SEO agencies. They land a high quality backlink, you pay them $200. A low quality backlink, you will pay $70 instead of paying them $1,000 per month. So create those situations where if you have more work, you pay more. If you have less work, you have less costs. That makes you resilient. Now, with that cash flow, we have improved your cash flow and we have reduced costs. Now we move to the investing side. And this is where stuff gets exciting, because real wealth is, of course, created during recessions. And this, your competitors will have a liquidity crunch, will have a cash crunch. If they don't do the last 4 things that we were talking about, they have a liquidity problem. Now they will come to you and say, can you buy us? So there will be opportunities. How do we create an investing system? Because this is important. It starts before. You start building your cash position before the recession. So you build cash in the bull market, and when you're in the bear market, you have now an increased cash position. So what do I do in a bull market? In a bull market, I am 25% in real estate, in commercial real estate. It's the best. And I'm 25% in stocks. And I'm 25%, me personally, in digital assets, in crypto. And I am 25% cash. So that's my general way. But I build those 25% up during the bull run because I skim the profits from stocks and from crypto when they run up. And so I layer out some of the profits. And that increases my cash position. Now, before the recession comes, I will be 27%, 28%, 30% cash, ideally 35% cash this week. So if you had that, and I am doing that, since November that I'm selling profits, November selling profits, December selling profits, January selling profits, and then it was over. The party was over, but I have increased the cash position, and now July, I am buying. This week, I am buying. I'm looking for stocks. I'm looking for cryptos. I'm looking for, of course, competitors that I can buy. This is why you build the cash position, because now this is shopping time if you are ready. And then there are strong assets and there are weak assets. This is something that I learned quite late. We don't learn this in school, unfortunately. We should. So a weak asset is something that deteriorates in value. So you buy a car, that's the worst thing that you can buy because like 1 week later, it's worth less. So why should I buy a car? And the opposite of it is a strong asset. For example, real estate, prime commercial real estate in a limited area, like in Miami Beach, in Manhattan, New York. That's a strong asset because, try to build in Miami and you will see it. It's limited and everybody wants it. And that combination, limited supply, high demand, that's a strong asset. And now you might go through your assets and identify some of those. For me, it's commercial real estate in prime zones. And it was gold. It's not working so much anymore. Right now, it's more Bitcoin probably. It's not completely sure, but that's where my bets go. I think Bitcoin is limited enough and is enough in demand, but we will see if that's true, right? It's a bet right now. But it's limited in supply. Some energy companies right now, if you look at coal, natural gas, there is some limited supply in Europe for energy. That might be something you want to play with. But when do you build your cash position? In the bull market. So that was up until November. And now it's time to buy and to deploy your cash and then to go low cash for the next bull run.
Right. Yeah, absolutely. I like how you've broken down your own personal portfolio there. And I also like what you said there when it comes to taking fixed expenses. You know, when things start getting tougher in the economy, taking fixed expenses, converting those to variable expenses, making sure that people are on more of a performance-based trajectory. Is there a way that people should be thinking in terms, you mentioned some of that on the marketing side of things, but is there a strategy or something that comes to mind when you say, hey, here's just kind of a broad way to take more market share in a recessionary environment?
Yeah, the difference is how much cash did you skim from your profits during the bull runs? Because that's exactly now your possibility, your liquidity that you can do. And that's what you can do right now. And so the opportunities come all of a sudden. Like this week will be full of opportunities. We have earnings coming up from Google, Amazon, etc. Walmart had just earnings and boom, down 10% after earnings. So there will be opportunities. I hope I can buy some Berkshire this week or some Amazon because they will have heavy dips after announcing earnings, but we don't know. So I'm ready. That's why I call it an investing system. Because you see, it's not just a one-time thing. Is you prepare yourself for the opportunity. When the opportunity comes, you know exactly what to do. You have some price goals, you have some enter zones, some exit zones, and you have a way of checking in which part of the cycle are you. Is this now an uptrend, a downtrend? Is it a 10-year cycle? Is it a 1-year cycle? What kind of cycle is this? And so when should I layer in? When should I layer out? When to increase the cash position and when to decrease the cash position, when to deploy it, when to be in the market. Because generally being in the market beats timing the market. Right. Most people cannot time tops and bottoms. It's better to be long-term, like 40 years in a market. And imagine if you have bought 40 years ago, if you had bought Apple, now you would be very happy. And so just stick around with something that is fundamentally strong. That's definitely better. And then you might have a 20% maybe of a trading position where you go in and out of things as the opportunities arise. For example, competitors, you cannot really plan that. At some point, some supplier that you are working with will say, I can't work anymore. And then you might say, well, I can buy you. So these things happen spontaneous and quick, and you can use them, but you can prepare for them. That's why I call it an investing system.
Right. And I think what you mentioned there was, and again, skimming the profits over the years in the bull run. One of the other things I think that you pointed out was interesting. Obviously, no one can time the market, but when we see things softening, and certainly we're seeing that in the commercial real estate sector. I just finished a call with somebody here right before you and I jumped on, and he was talking about how now they're getting what they call for offers on multifamily real estate, where before there were no call for offers, it was 20 people bidding on the same asset, and his contention was that we're down to at least he said we have a third of the buyers in the market maybe now than we did 6 to 9 months ago. which to me, that just screams, gosh, now's the opportunity, or at least the beginning of the opportunity to go out and, continue to acquire, which that, again, I love your point there that being in the market is more important than attempting to time the market. I think that was really, really sound advice. So certainly appreciate that. Is there any other things that come to mind when you think about this and you think about entering a recessionary / inflationary, potentially stagflation environment that you're telling your clients right now, where you say, hey, here's some, other than stacking cash, are there any other things that are coming to mind? You say, man, this is a critical move that people should be making right now.
Yes, simplify your business. So in the book, Strategy Sprints, we start with the first chapter, how you simplify your business. So you go through the activities that you do and you identify your winning horses. You have probably 4, 5, up to 17 different things that you actually offer for 3 to 4 different segments of people. That's an average. When we're working with so many hundreds of entrepreneurs, that's an average. On average, they have 17 different offers at different prices for what we call 4 ideal clients. Simplifying a business means pick the winner from your offer and pick the winner from your ideal clients. So now you simplify. Now your sales becomes easier. Your marketing can work better for sales, and your operations are easier. Now, every week you can improve by 1% your operations. That makes everything, frictionless and effortless. Now your people are happier. They will stick around longer. Now you are happier because you have now something that works actually. So you can relax. It works also a little bit more independent from you. And it all starts by simplifying. We call it the value ladder. You start mapping out your business in a specific way. And in chapter 1, I show examples, and there are clients of us explaining how they did it to simplify their business. Because when you've simplified it, now you can manage it better, and it's much more resilient. And the second part is you go through the costs and make them variable costs. So with all your contractors, you start having performance-based contracts and weekly check-ins, weekly progress reports that they are actually meeting those goals, because then they will get paid. So
I love it.
You increase the resilience of your business. And that is the only thing in your control. 95% is not in your control. Market is not in your control. Sales is not in your control. So what is actually in your control? I always say it's just 3 things: your daily habit, your weekly habit, and your monthly habit. Daily habit is how did you allocate your time today, and what will you delegate tomorrow? What will you automate? What will you systemize? The weekly habit, getting your sales numbers, marketing numbers, operations numbers reported every 7 days in a simple dashboard. Monthly habit is doing a strategic analysis. What is the market doing? What are competitors doing? Do we need to change something? Where do we cut costs? Where do we reinvest? These 3 things, daily habit, weekly habit, and monthly habit, are the only things that are always in your control. Recession, bull run, stagflation, whatever, war. These 3 things are always in your control. The rest is actually never in your control.
I love it. Simon, thank you for taking the time to come on today. This was certainly insightful. I love everything you shared with us here today. It is a great timing on this episode, just getting people to think about how to expand their companies and how to really take market share in times of potential recession. So certainly appreciate it. Thank you for that. If our listeners want to get in touch with you, learn more about you, and or get a copy of your book, what is the best way to do that?
So I hang out at strategysprints.com, and the book is on Amazon. It's called Strategy Sprints, and it tackles the biggest problem: the marketing problem, the sales problem, the operations problem, the hiring problem. And if you buy it on Amazon, leave me a review. I'm super curious how you experience the book. So yes.
Awesome. Certainly. I will make sure I get a copy of that myself. Simon, thank you again for coming on the show today. I certainly appreciate it.
Thank you. Keep rolling, everybody.